You could be wrong about Tesla's stock valuation. Here's why. Tesla bulls are known for their excessive valuations. Ron Barron, the famous Tesla bull, predicted that the company would achieve a return of 3 to 5% within 10 years. Cathie Wood's 5-year forecast is $3,000, which means a market size of $3 trillion. On the other hand, skeptics stand on the polar extreme. Citigroup Incorporated has, with an underweight rating on the company, but raised its price target to $313 on January 27. JP Morgan Chase & Co. both have price estimates for the stock to decline by more than 70%. Want to know why everyone is wrong about Tesla's stock valuation? Keep watching to find out. First, we will clarify the bearish outlook. In the first quarter of the year, Tesla produced 305,000 vehicles and delivered 310,000, resulting in an annual manufacturing pace of about 1.2 million vehicles. Manufacturing and deliveries of the Model S, the company's new Roadster, may have helped revive this business segment, but there's no indication it will be released anytime soon. In our opinion, the company's automotive business is divided into 4 divisions. The first category includes low-cost Model I and Model Y vehicles. The second is high-end cars such as Ferraris, Roadster. The third category includes high-end medium-sized vehicles, Models S and X. The fourth area of focus is self-driving cars and the company's work in this field. The company has made a big deal about its upcoming Roadster. However, the deadline has been repeatedly postponed and the latest estimate is 2023. It is still unclear whether this will actually happen in 2023. The company's S and X models come next. These models, in our opinion, are what made Tesla what it is today. However, the company has not had great performance in a long time, and sales represent only a small percentage of the business. As a result, the company's annual revenue does not exceed a few $billions. Then there are self-driving cars. At the moment, this remains undetermined. Sure, the beta version of FSD exists, but the company keeps delaying it. Musk promised to release it this year, but we don't know. Therefore, the schedule is often unpredictable. Tesla has repeatedly delayed its full self-driving history, angering customers who paid a premium for the service and expected it sooner. Again, we're not saying Tesla won't prevail. However, a good case study would be Waymo, whose valuation fell from $200 billion to $30 billion. Finally, we'll take a look at the Model I and Model Y. These lower-cost models are available now. The company expects to produce more than 2 million vehicles annually by 2022, primarily of these vehicles, and we see Tesla moving closer to becoming a mass-market manufacturer with more competition as a global leader in reliable, low-cost vehicles. Toyota is a viable metric here, with annual sales of 10 million vehicles and a market value of $280 billion. It is worth noting that even with an annual growth rate of 50%, there is a huge difference between 2 million and 10 million vehicles per year. Let's ignore the bullish thesis timeline and look at what it would take for a company to reach a $5 trillion valuation. For a company to reach a long-term valuation of $5 trillion, free cash flow must exceed a certain threshold. It may not be when the company reaches valuation, but it should have a path to get there. We will not take inflation into account, because we assume that investors do not want a company within a 5x market valuation, just because inflation will devalue the dollar to 1 to 5 of its current value. A more literal estimate is a profit of $5,000 per vehicle delivered multiplied by sales of 5 million vehicles per year. Assuming the company accomplishes this, that means total free cash flow of $25 billion. At our 8% yield, we are putting $300 billion into the self-driving business, or 10 times Waymo's percentage value. Another business is energy storage. The company currently has a 7% market share, and I'll give it the benefit of the doubt that it can triple that share to nearly 20% in the coming years. In decades, some might argue that it's too low given the company's success, but an industry that has never had a large moat would also give a 20% margin. Assuming $150 per co-op by 2030, This equates to $6 billion in foreign cash flows and $30 billion in capital expenditures. We are now looking at EVs like the Roadster and even the Models S and X in the high-end market. We think the best way to value this company is to compare it to its peers' earnings. High-end luxury businesses may be valued as much as Mercedes-Benz and BMW combined, or about $30 billion of free cash flow. Investors bullish on Tesla continue to expect market-beating gains despite the company's valuation crossing the $1 trillion mark. This is the case despite the ability of other companies, such as Apple, to continue growing from this point. We believe Tesla may struggle due to its lack of significant free cash flow and a path to deliver shareholder returns. On the other hand, let's look from a different perspective. Tesla is considered by many to be an expensive stock, but as gas costs continue to rise, public opinion appears to be changing. Tesla sales are already starting to rise, and we think this may be just the beginning with Russia, the world's largest producer of crude oil, the main component of gasoline in the war. Gas prices are likely to remain high for much longer than previously expected. Moreover, it is almost inevitable that many countries will reduce their dependence on Russia for energy. If this happens, gas prices will inevitably rise as other providers try to keep up with the unexpected increase in demand. Tesla cars, of course, are expensive. On the other hand, gas prices compound over time for individuals living in rural areas in the United States, where cars are almost a necessity and gas prices can be a greater burden. Without a decrease in gasoline prices, consumers may find Tesla vehicles more cost-effective in the long run. Tesla was one of the first companies to take electric cars seriously, giving it an advantage over its competitors. Tesla has essentially dominated the electric vehicle segment without any major challenge from its main competitors. Tesla also offers some of the most advanced self-driving technology and one of the lowest maintenance costs of any car. They're effectively doing what Apple did with phones and electric vehicles, charging a premium for ease of use. In the long term, Tesla's competitors are sure to catch up. However, Tesla will continue to capture a significant portion of electric vehicle sales due to its popularity. Tesla is not just an electric car manufacturer. It produces a variety of income-generating energy products, such as solar roofs and storage or charging systems. This puts them front and center from many angles, and they are sure to benefit from the world's shift to renewable energy sources. In conclusion, I feel that Tesla will be there for a long time, even if Tesla remains in the lead and the world adapts to renewable energy in the future. Market sentiment may not support the high numbers that Tesla has been known to reach regularly. It is still important to realize that the market is very volatile. If the current global scenario leads to a recession, Tesla will certainly decline along with the rest of the market. Gas prices could decline due to a recession, as they did in 2008. In 2020, from a conventional standpoint, Tesla is still overvalued. However, a stock is about more than just its earnings and market value. Although Tesla has been fundamentally overvalued for nearly a decade, it has continued to rise. In short, traditional measurements appear to be ineffective for Tesla. Moreover, Tesla's revenue growth has been excellent, and the company is slowly closing the gap between market cap and revenue. Although this is true, every positive evaluation depends on what Tesla will achieve in the future. Musk and his associates are known to make strange promises and never follow through. What happens if the company does not achieve its goals? What happens if the macroeconomic climate suddenly becomes unfavorable for Tesla? However, we are pro-Tesla on this channel. Tesla has expanded rapidly, and in a world where governments are moving toward renewable energy, it is not unreasonable to expect Tesla's value to rise. Are you bullish or bearish on Tesla? Comment below.